Hello, hello, welcome in. It's been a minute. I've been taking care of some family stuff, but I'm back. I'm happy to be back. And without further ado, let's get into it. This is the Bitcoin Escape Hatch, a Bitcoin only education channel where the signal is information, the outcome is financial freedom. Today, as the title of the video says, we're talking about why you should own Bitcoin instead of a Bitcoin ETF, and we're going to get into it. This is a crucial topic, and I think what a lot of people miss about owning Bitcoin is the fact that you own it yourself in cold storage. When you have it in cold storage, that is when it is yours. When you hold an ETF, it's like holding a stock in any other company, and that defeats the purpose of why we are Bitcoiners, right? Bitcoin in cold storage beats relying on Bitcoin ETFs. I'm going to break down the risks of centralized holders and custodians with a few real-world examples of crashes, hacks, and failures. They happen. We've heard of them. You've probably heard of them. So this could save you from major headaches, and I hope it does if you're watching this. First off, let's clarify what we're talking about today. Spot Bitcoin or Bitcoin in cold storage means you actually hold your coins in cold storage on a cold storage wallet, not in a hot wallet online, in a cold storage wallet where you've written down your seed phrase and you've stored it away securely. A video that I released last week on some best practices, I'll link it down below. So check that out if you're looking for advice on how to keep that secure. On the flip side, Bitcoin ETFs are financial products traded on stock exchanges, like I was saying. It's a stock. They track Bitcoin's price, but you don't own any Bitcoin. A custodian does. Sounds convenient because most people don't want to put in the work. And that's the thing about Bitcoin. It requires you to put in your work, do your own research, and it requires you to learn how to self-custody, how to set up multi-sigs, and how to store your wealth safely so you can be sovereign. So I'm going to unpack why it's a problem to hold just a basic stock. It's basically what you're holding, and why it defeats the whole purpose of owning Bitcoin in the first place. With Bitcoin in cold storage, you control the private keys, as I was saying. That means true sovereignty over your assets, your wealth. You can access, move, or spend your Bitcoin anytime, anywhere in the world without asking anyone for permission. That one sentence there is basically why we Bitcoin, right? If you're like me, you've ever been in a situation where the bank didn't give you access to your money, which is complete BS, if you ask me, that sentence hits harder. The costs are minimal. It's usually a one-time cost. You pay once for your cold storage wallet, and that's it. No recurring costs or cuts for anyone, any middleman, anywhere else. Security comes from keeping things offline, slashing hack risks dramatically. And best of all, zero counterparty risk, because no third party holds your coins. Now, Bitcoin ETFs. As for Bitcoin ETFs, like I was saying, you own shares in a fund that tracks Bitcoin price, but the actual Bitcoin sits with a custodian, not even the company that runs the ETF, which is kind of crazy to me. They outsource that responsibility. So there's three layers there, right? You outsource having exposure to Bitcoin to a company who outsources holding the Bitcoin that they buy to another company. It's kind of crazy. You can't withdraw real Bitcoin. There's no Bitcoin anywhere if you own an ETF. The company that sells you the stock on the ETF owns the Bitcoin. You sell shares for dollars instead. And here's a key ongoing cost that many people overlook about owning ETFs. Annual management fees, also called expense ratio, the expense ratio. These typically range from 0.15% to 1.5% per year, depending on the ETF. For example, popular ETFs like BlackRock's or Fidelity's usually run around 0.25%, while others like Grayscale, they're still a little hefty at 1.5%. These aren't fees that you get billed monthly like a Netflix subscription. The ETF provider deducts them automatically from the fund's assets every day, a tiny amount that adds up to the full annual percentage, annual meaning yearly. So if you hold $10,000 worth of an ETF with a 0.25% expense ratio, the fees, you are indirectly paying about $25 a year. Now, I know that number doesn't sound too crazy, and it's not supposed to. I think those fees are pretty good. But as an individual, it's not about having exposure to Bitcoin and just putting up with a low fee. That's not what this is about. We're going to get into it. These fees reduce the fund's net value slightly each day, meaning your shares don't capture 100% of Bitcoin's price gains. Over time, this really eats into your returns because of the compounding effect. Imagine Bitcoin rises 10% in a year with no fees and your Bitcoin in self-custody, you get the full exposure of that 10%. And we know it runs more and dips way more than that. In an ETF that charges you 0.25% in management fees, you might net closer to 9.75% of that 10% gain. I hope that makes sense. It doesn't sound huge, it definitely isn't. But over 10 to 20 years, especially if Bitcoin keeps growing, those small percentages can cost you thousands or more in lost gains. As for a higher fee one, like the 1.5% fees that we mentioned, that could shave off way more over that time period, turning solid performances into something much less impressive. Plus, you're locked into the traditional financial system. No using your Bitcoin for payments or DeFi or anything beyond just trading, like buying and selling shares. And that defeats the purpose of why we have Bitcoin. We wanted to escape that system, right? These fees go on forever for as long as you hold the ETF. Unlike self custody, where you just have that one time setup fee, your costs continue for as long as you hold it. This is why understanding fees matter for long term holders. They're not free convenience, they're a slow, steady drag that ETFs build in, while true spot Bitcoin in cold storage lets you keep every Satoshi worth of upside for yourself. Now, as for security, you are 100% purely responsible for your own Bitcoin in cold storage. ETF security depends entirely on custodial measures, creating a potential single point of failure. And counterparty risk is high because you have to trust the custodians, brokers, and regulators that are involved. Self custody puts you in the driver's seat. Bitcoin was designed to eliminate those middlemen. Remember Satoshi's vision. But ETFs bring all those people right back in. Just everybody feels like they need to get a piece of we go, whether we're talking about stocks, ETFs, remittances. It just drives me nuts. Anyways, onwards. Now, the big issue, like I mentioned, is counterparty risk. That's the danger that the people holding your assets can screw up, they can get hacked, or they can go belly up. And it's happened. We're going to dive into a few examples. These aren't just headlines. They've ruined lives completely, wiped out savings, and left people fighting for scraps years and even decades later. And they all boil down to trusting someone else with your Bitcoin. We're going to start with one that everybody knows, Mt. Gox. This was the biggest Bitcoin exchange at the time in 2014, handling most of global trades when it came to Bitcoin. Hackers exploited a vulnerability called transaction malleability. I hope I said that right. So they slowly siphoned around 850,000 Bitcoin, which is a wild number. That was roughly 7% of all Bitcoin in existence at the time. When it collapsed, over 24,000 verified users, some estimates say up to 120,000 users, lost access. Many were everyday folks who parked their early Bitcoin there because they thought it was safe. They didn't want to do the work and learn about self-custody, and they paid the price. It's sad, but they paid the price. They thought it was safe. The price crashed 36%, and the bankruptcy dragged on for years. They recovered about 200,000 Bitcoin from old wallets, but the rest, gone. 650,000 Bitcoin they never got back. Repayments in Bitcoin and Bitcoin Cash finally started in around 2024, so that's 10 years later. But as of 2026, only around 20,000 creditors have gotten funds. And now, the crazy part is they only got around 15 to 20% of their Bitcoin back through dollar value. And I hope I can explain this properly. They got the Bitcoin back at the price that they had it at when it was crashed, if that makes sense. They didn't get it back at the price it is now. So they lost out on all those gains. These deadlines have been pushed back multiple times. Like I said, now it's 2026 with thousands still waiting due to paperwork, banking glitches, or court delays. Imagine losing your Bitcoin a decade ago, 10 years ago, then watching it run to all-time highs 3 times during that 10 years. While you're stuck in limbo, you can't do anything, and that could have been life-changing money for people who could have retired, moved and homesteaded and farmed and lived a peaceful life. Don't outsource that responsibility, okay? Now they're just stuck in limbo, like I said, fighting for partial scraps. Whatever they get back at the dollar amount that they had it in the exchange with. That's the toll. An eroded trust, massive stress, and incomplete recovery. Next, QuadrigaCX in 2019. This was a Canadian exchange. The CEO, Gerald Cotton, died suddenly, and he was the only one with the access to the cold wallet holdings. So, good practice for putting all the funds in there bad OPSEC, right? They should have done some sort of multi-sig or had some sort of setup where not just one person controlled $250 million worth of Bitcoin, which is kind of crazy. That's how much they lost. But a significant amount of Bitcoin and some altcoins made up the $250 million. There was no backups, massive shortfalls revealed in bankruptcy. Over 115,000 users were hit, many with all of their life savings and retirement funds gone. Imagine that. As for recovery, the trustee recovered around $46 million, less than a third, mostly from frozen bank accounts, which I couldn't find any information on that, which is kind of scary, and not the Bitcoin, leaving an estimated $169 million hole. Creditors got a rough estimate, they don't even really know, of 13 to 20% back after years of legal battles. Again, imagine knowing you have a bunch of Bitcoin somewhere, in most cases, enough to retire, watching the price go crazy over the last 10 years, and not being able to do anything about it. Families lost everything because one custodian controlled it all. No access, no recourse, pure failure of trust. Now, this is my favorite one because when we're talking about FTX, and the reason why it's my favorite one is I just remember looking at Sam Bankman-Fried, and I wasn't posting, wasn't making videos. I was just somebody learning about Bitcoin in the background. And I remember seeing him on interviews and on magazines, and I was like, this is not Bitcoin. This is not a Bitcoin person. Anyways, FTX in 2022, the massive fraud that shook the world, and Sam Bankman-Fried's epic collapse, with an estimated of $8 to $10 billion from misused customers' funds, which included Bitcoin and a bunch of altcoins. Millions worldwide couldn't withdraw. Savings vanished overnight. A post-collapse hack stole even more when they went down, which is up to around $659 million, which is funny because they got kicked while they were down. Bankruptcy recoveries have been a little better than most, but not completely whole. By early 2026, the plan was paying out 118 to 143% as of November 2022. And these were in cash values. They weren't paying back the altcoins or Bitcoin. Smaller claims, which were under $50,000, they got payout first, which is okay. Protect the little guys, that's fine. With billions distributed in rounds through in many different rounds through 2025, including a 1.6 billion third round in September. So they're slowly paying these people back, but people have not been made whole. But there is a catch. Payouts are based on 2022 prices, like I was saying before. With the Mt. Gox hack, they got paid out on the prices of the year that they were holding. Bitcoin was around 17K then. Holders recovered fiat equivalents. That's a better way to say it. But now only 9 to 46% in real Bitcoin terms after missing the epic rally since then. Years of stress again, legal fights, and opportunity costs for what should have been people's returns. And finally, I wanted to add this one in here because even the big players aren't immune. Binance in 2019. Hackers used a phishing virus and other tricks to steal 7,000 Bitcoin, valued around $40 million, from their hot wallet, which is kind of crazy. They kept $40 million worth of Bitcoin in the hot wallet in one transaction. It affected users worldwide, freezing withdrawals temporarily. The good thing is Binance covered it with the SAFU fund, so holders got reimbursed relatively quickly, no direct losses for most. But this exposed how centralized hot wallets create massive targets. One breach and everything is gone. These stories show a pattern. Hacks drain wallets, fraud or death lock funds away. Recoveries mean waiting years for partial returns and missing a lot of Bitcoin's upside. Centralized custody turns one failure into a massive pain. In 2024 alone, hacks stole over $2.2 billion worth of crypto and Bitcoin across the world in a lot of similar cases and issues. As for Bitcoin ETFs, this is where I wanted to bring it back. They're built on the same trust model. Most of them use Coinbase as a custodian, which holds a large portion of Bitcoin ETF assets. And for me, that is a massive single point of failure. Now, to give Coinbase some credit before I kind of go in on hard on the paint on them, they do put all their holdings, or so we have been told, in a multi-sig cold custody setup. That is good, but for me, still defeats the purpose of holding Bitcoin for yourself versus holding an ETF, and it still just seems like a massive risk to me. Coinbase serves as the custodian for the mass majority of Bitcoin ETFs. Reports from 2025 into 2026 showed holding 80 to 85% of the assets held in these funds, in the ETF funds. If Coinbase faces a major hack, and I'm not talking about a hack to their cold storage, a hack to their system, which is unlikely, but it still could happen. I bet people in Mt. Gox and FTX never thought they would go down, but they did. Or a severe regulatory action, which is very likely, or even government seizure or freeze, or even a rogue employee. It could disrupt access to those holdings, not attack the holdings directly, but disrupt access to them. These could cause ETF shares to plummet or make your investment temporarily, or worse, inaccessible. This concentration of custody creates real systemic risk. Unlike true self-custody, where you control your own keys with no middleman involved, they hold their own keys with lots of middlemen involved. The reason why I feel like this is such a single point of failure is they hold so much Bitcoin, and it just, to me, yes, they're set up as sound. It just creates a massive target. It just seems like there's this big target on them, and I bet there's lots of shady people around the world that love to get their hands on their Bitcoin. Beyond that, let's zoom out and look at Coinbase as a company. It's not just a neutral Bitcoin custodian. It's a full-service crypto exchange that heavily promotes altcoins. As someone who started with a Coinbase account in the past, I remember receiving weekly emails and little introductory courses that pushed tokens. If you watch videos, they would give you a couple of altcoins, and they would send me emails about launches and promotions basically weekly. Just continuous distractions from real signal. And I feel like it could really push new users off course when they're learning about Bitcoin, right? If you're early into Bitcoin, learning about Bitcoin, and you're on Coinbase, and they send you an email like, hey, look at this awesome altcoin, its transactions per second is faster than Bitcoin's, somebody might look at that as a better alternative if they haven't fully gone down the Bitcoin rabbit hole. And I feel like that is an issue for me personally. For a Bitcoin maximalist like me, it felt eerily similar to the hype-driven environment that contributed to disasters like FTX, flashy altcoins, and speculative features like staking and yield mask deeper issues, and that's what I'm talking about. Many altcoins launch with pre-mines or massive inside allocations, sometimes 50 to 75% of the total supply is given to founders, teams, early backers, and they usually justify it as these funds are for development and so on. But we've seen this pattern repeatedly. Insiders slowly dump large portion as the price rises, leaving retail holders holding the bag, right? It's basically a rug. As the project fades or rugs, it's a classic altcoin casino where insiders have a large amount. They just happen to get in early or be an early investor. And as more people get in, your exit liquidity. It's what it's called. Bitcoin stands in stark contrast to that. No pre-mine, no insiders or executives getting privileges to altcoin allocations, no centralized team controlling the narrative or offloading tokens. Think of Satoshi's million lockup, right? He mined those on his own after the protocol launched and sent them to a dead wallet. As for Bitcoin, it's pure math. Open source code that anybody can verify. Proof of work energy required to run this massive network, and uncompromised honesty. Decentralized from day one, since the Genesis block. If you're going to park your hard-earned money, that you go to work and you trade your one and only resource, which is your time left on this earth, for money, and put it into something long-term, wouldn't you choose that kind of integrity over a system built on trust, promotions, and potential conflicts? You certainly would, or at least I hope you would. We spent generations keeping our money in banks, having to ask permission to access or move funds we've earned ourselves, and that's always been ludicrous to me. Bitcoin was created to end that dependency. ETFs bring some of that permission-based, middleman trusting model back into the picture, right? We're going backwards when you own the ETF. Remember that true freedom comes from holding your own keys in cold storage. No single point of failure. No promotional spam, no insider games, just you and your Bitcoin. That's the escape hatch worth opening. Remember, governments have frozen accounts before. Think of the Canadian truckers in 2022. Or the potential taxes on unrealized gains, right? There's no place in the legacy financial system where they won't look to tax you. Plus, With ETFs, you're paying fees forever. Even low ones like 0.25% or 0.15% can compound over time, reducing your stack, and you can't use that Bitcoin for payments. It's locked in the traditional system, like I said. Self-custody isn't risk-free. Lose your keys, and your Bitcoin is gone forever. But that's on you, not some shady custodian. So why take the risk with ETFs when you can escape the hatch to true freedom? Think about why Satoshi created Bitcoin in the first place. It wasn't to give us another asset class for Wall Street to package and sell. It was to give ordinary people like you and me a way out. A way to opt out of a system that prints money endlessly, freezes accounts when you speak out, that forces you to trust middlemen who have proven time and time again that they can't be trusted. Think of 2008, where banks were bailed out, no one went to jail for all the malpractice they were doing, people lost everything, and executives got massive bonuses. Just a little plug in here. Watch the movie The Big Short. That it explains that in a sentence much better than I could. It's actually my favorite movie. Every major hack, every collapsed exchange, every frozen custodial account is a reminder. Trust minimizes risk only until it doesn't. And I love that. And when it doesn't, the people who suffer the most are the ones who trusted. But you don't have to be one of them. Right now, in this moment, you have a choice most people in history never had. The choice is to hold real, uncensorable, borderless money in your own hands. That is pretty powerful. The power is sitting right there, waiting for you to claim it. Start small if you need to. Learn the basics. Practice with a tiny amount. Use a reputable hardware wallet. Back up your seed phrase like your life depends on it, because one day it just might. The journey to self-custody isn't about being perfect on day one. It's about taking responsibility for your wealth, your freedom, and your future. It's about learning how to take back control of your money one step at a time. Step 1, learn about Bitcoin and why it stands above the rest. That is the entire reason why I made this channel. Step 2, learn to buy Bitcoin on a trusted exchange with a great reputation. Step 3, learn how to take self-custody. This is the single most important thing you can do in this journey, because that's the step that makes you truly sovereign. Step 4, dollar cost average. Learn that you can buy small amounts. Buy over a 3, 4, 5 year period, and you will be amazed at how big your stack gets. I promise you that. Step 5, freedom. The future is bright and it's orange. So do it. Today, buy a small amount. Start with $20, like I said. Move some off an exchange into cold storage and into your control. Because when the next storm hits, whether it's another FTX, another government overreach, or just the slow grind of inflation every single time they print money, you'll be the one standing tall, keys in hand, smiling. You are the escape hatch. Now go open it. Hold your keys, protect your freedom, and never look back. Thank you so much for watching if you're here right now. I know that one at the end, they got a little passionate, and that's just the way I feel. As somebody who's been burnt by banks and accounts frozen for absolutely no reason, yeah, take back control of what is yours, okay? Are you feeling self-custody ready? If not, reach out to me. You want to do a one-on-one? Hit me up. Send me a message on YouTube, and we can get connected. I will help you, I promise. Or I will send you to somebody that you can pay, and they have a great reputation for setting that up. Let me know in the comments how this one landed. Remember, owning Bitcoin in a cold storage is the reason why you own Bitcoin, not just having exposure to Bitcoin through an ETF. Thank you so much for being here. And as always, if you're going to buy Bitcoin, send it to cold storage, stay sovereign, and I'll see you in the next one. Peace out.